All right, welcome everybody. Today's topic that we're going to go over is going to be learning from losses, looking at losses from a learning perspective. Like a lot of time, what happens is that we take a loss, and not many people are willing to face that loss to say that, okay, how could we have made this loss better? Time and time again, I get charts saying that, hey, this is a loss I took. What should I do? And every time I tell them, well, okay, look at it from a perspective that how could you have made this loss better? Was it something you missed, something you didn't recognize at the time? So we're going to go over this presentation here, and then at the end, we will do a little simulation. I think simulation I haven't done in 2 weeks myself, so I think that's going to be very good practice as well. So first, what we're going to do is first we will define what is a loss, right? Like when you take a loss, what emotional triggers that do trigger in you. But at the same time, we have to define what a loss is. A loss is defined as a trade that did not work. Maybe there was something you overlooked. Maybe there was something, maybe price on the high time frame was creating a support or creating a resistance, but you looked at the small time frame a lot and you took a trade on that perspective. Maybe price was consolidating and you didn't recognize that. The best way to recognize consolidation is to see if candles are really closing side by side, right? Maybe there was news events, right? Because sometimes what happens is that that when we're planning out a trade and we look at that, okay, well, we've taken losses in the past and this news trade is really going to help us out, but in reality, it doesn't, because the spreads go up and news moves fast, the stops get slipped. So those are main causes of having a loss. Trade based on a lower time frame confirmation. This is another issue that comes up over and over again. Now, when you're looking at what a loss is, sometimes, you might want to enter based on a 5-minute confirmation, or you might want to enter on a 15-minute confirmation, which means the confirms are still there, but the quality of the confirmation is not there. It's not a good quality confirmation, because if you're looking at the 30-minute time frame, the 1-hour time frame, you have to wait a little longer for confirmation to happen, right? You have to wait a little longer for the candle to close. But when you're looking at the 15-minute or the 5-minute, you might see those perfect candles forming. But at the end of the day, if it doesn't work out, that's a very bad feeling. When you take a trade and you know that there's a less chance of this trade running, but you still take the trade and it hits your stop loss, and without surprise, you're like, oh man. Or sometimes what happens is that you'll take a buy, price will retrace, then you will take more buys, right? Price will retrace and you take more buys after that. So that's one thing that we have to really eliminate when we're looking at losses here. The other thing is trading at times you shouldn't trade. This is another main reason for losses. For example, what happens is that we want to trade in the morning, like from 6:30 to 9:30, and then after that, in the afternoon time, you'll still be looking at charts, right? Because most times what happens is guys will take a look at charts at like 12 p.m. Eastern or 1 p.m. Eastern, and they'll say, well, we're looking at the charts to see that if the setup works. We're looking at from a learning perspective, or we're looking at from a perspective that, okay, we want to see if it really works, or is this really what's going to happen? But the fact of the matter is that if price is going to move with a lot of volume in the New York session or the London or Asian, it's not going to move with the same volume in all the other times. If you're used to trading the New York Open, and if you start looking at a potential setup at 1 p.m. Eastern in the afternoon when there's no volume, price may not move the same way. And it will definitely not move the same way. So at that time, you're just wasting your time. You're wasting your time looking at the charts, you're wasting energy. If it doesn't work your way, then you're facing with the that hits your confidence a lot, and the worst is when you're looking in the afternoon time and you do take a trade, knowing this is the bad time for you to take a trade, and if you lose the trade, that's even the worst feeling. But what happens if you win the trade, right? If you win a trade accidentally, I think that's just as bad as losing a trade. At times you shouldn't be trading, because if you win a trade accidentally on a bad time to trade or at a bad setup, what's going to happen is that you're going to think it's going to happen all the time, and it won't, right? So what we're going to do is we'll look at what are some of the causes that make the losses a little bigger, right? The number one thing is mental stop loss, right? So when you're taking a position, a lot of times guys will say, hey, like, you know what? I have a mental stop loss. But just one moment. Let me just fix this one thing here. All right. So mental stops. Mental stops are for new traders. I think it's really, really dangerous. If you're an experienced trader and you have some sort of confidence in your abilities, mental stops are still extremely dangerous, because what happens with mental stops is, like, if you let's say you take a sell, right? Let's say that you have a resistance up over here, right? And you have a candle running up. A candle's running up, and you're like, okay, now you know what I'm going to do? I'm going to take a sell at this point, and I'm going to have a mental stop loss. Like, I'm going to close at a set percentage, or I'm going to close at set negative pips. So you take a sell. When the candles are bullish, let's say this is a bullish candle here, right? You take a sell, price moves up a little bit, and you're like, oh, okay, well, price is moving up, but I still think this is a resistance, so this move up might be a fake out. So what happens is then you go in a more deeper drawdown here, right? Price moves up against me. You're like, oh man, okay, you know what? Price is moving against me, but at the same time, I still think it's going to come down. And then what happens is price starts to come down. Now price is starting to come down, and you're like waiting and waiting and waiting, and price comes down to your entry point. Now when prices came down to your entry point, at this time you're thinking, okay, perfect. I'm at break even right now, and then price is going to now continue down, and I'm going to go in profits. This happens to everybody. This used to happen to me too. So what happens is then you go away, like you go about your day, you do things that you have to do, and then essentially what happens is price creates a support right here, and then price starts moving up furthermore. So when you come back and look at the charts, you're like, oh shit, okay, now I'm in an even deeper drawdown. So what happened at this point essentially is that you took a sell at a point where you thought price was going to continue down, but price broke this resistance, continued to go up. You had a drawdown. Then price came down, retested the level where you were in, like, at a break even, and then price started to move further up. Now your drawdown became even greater. This happens when you don't know the market structure. This used to happen to me too, and at the end of the day, I used to think that, okay, why am I going in a drawdown, and then when price is retracing, my drawdown is getting smaller, and then I'm going in a even deeper drawdown. So start to look at this, right? I start to look back and say that, okay, how could I see this as something that can work in my favor? So I start to look at it from a way that, okay, well, maybe if this was resistance, let me use a better color here. So let's say if this was resistance here, right? Price was bullish. It broke resistance, came down, created support, and then started to go up. Someone's saying they can't hear me. I think the audio is fine, right? Audio is fine. Okay. Yeah, it's fine. So price created support and then continued to move up. So then start to look at it in a way that, okay, well, maybe I took a sell at resistance. So what was the problem, right? The number one problem was I took a sell at resistance when the candles were bullish. That was the number one problem. Number two problem was price broke resistance. So when price breaks a resistance, or when price breaks a support, it's no longer a sell or a buy. Once it broke resistance, logically it makes sense that, okay, once the zone is broken, it's going to come down, create a support, and then continue to go up. We don't see these things happening when we're in a trade. When we're in a bad trade, we don't look at these things. We just look at the fact that, okay, I'm $10 positive, I'm $5 positive, now I'm $10 negative, and now I'm $50 negative. That's all we look at. We don't look at what logically makes sense. So when you're looking at a chart, or when you're going in a drawdown, always look to see that, okay, how can this trade go against me? How can this be the wrong trade that I'm in? So if you're taking a sell at resistance, since price is breaking up and creating a support to go up, maybe that's the point you need to look back and say, hey, I took a sell, and price is moving up, I think this is a bad trade. I think price just did a break and retest. So that's how I learned market structure. That's how I learned break and retest. That's how I learned about candles with no wicks at the top of the bottom. That's how I learned about how to give trades second chances, or the break of the low or break of the high. Because I was constantly looking at these things to see that, okay, how could I have taken the correct trade? If I took the wrong trade, doesn't mean I'm a bad trader. It means I missed something that wasn't there. And that happens because I hadn't spent enough time in the markets to actually realize that, right? So every loss you take, that's an opportunity to learn something from that. Let's just remove all this and see what the next point is here. And next we have removing stops. That's another big issue. When price goes into negative and price is about to hit your stop loss, instead of accepting that stop, you want to remove that stop. That's absolutely unnecessary, because that basically means that you don't respect yourself. Like, if you don't respect your rules, you don't respect your stop losses, that means you don't respect yourself. At the same time, the market's not going to respect you. So you have to be very careful with using mental stops and removing stop loss, right? The other thing is when you get really fearful to accept the loss or close the loss. Like when you go into negative, there's certain things that happen, right? Like when you're negative, you don't want to close that negative. Let's say if you have $1,000 account and you go in negative $20, you don't want to accept that, right? You'd say, okay, well, you know what? I'm negative 20. I'm pretty sure it's going to come back. That negative 20 turns to negative 50. It turns to negative 100. Turns to negative 150, negative 200, then you're more open to close it at negative 200 than would you have closed at negative 20, right? This used to happen to everybody. This used to happen to me too. Like I'd be in a drawdown and if price would go to my stop loss, I'd say, okay, well, I don't want to accept this loss because I think it's still going to go my way, so I might want to remove my stop loss. And once I remove my stops, price will go in even more negative, and when it will go in even more negative, then I'm like, okay, shit, well, I guess now I might take this bigger loss instead of I should have taken the smaller loss. So whenever you're going in a drawdown and price is reaching your stop, never ever be afraid to accept that loss. We're going to talk more about how to look at your losses and how to see that how could you have taken the next trade, but this is really important here. Another trade that people take is called the fuck it position. That means is that when you see something that you believe is going to go, let's say, bullish, right? You're like, okay, you know what? Fuck it. It's going to go bullish. I'm going to open a trade, and I'm going to open a bigger trade right here. Because, hey, you know what? I've taken losses, and my account is down, let's say, 20%. Fuck it. Let's take a buy. And you take a buy without thinking what market structure is, without thinking where the stop loss is going to be. I mean, all thinking rationale goes out the window. So you really, really, really have to be careful whenever you take a position. When I take a position, I'm always looking to see how can this go bullish and how can this go bearish. And then I weigh the two out. I weigh the two odds. I'm like, okay, if it's going to go bullish, these are the things that will make it go bullish, or these are the things that will make it go bearish. And whichever has the most probability, that's the best trade to take. Over risking is another huge issue. These are the things that really make your losses big. Over risking, over trading. Over trading is so bad. I think over trading should be kept in the same category as that cop who killed that guy the other day. Over trading and over risking is really, really, really bad. Like when you're over risking, it doesn't make any sense. Because let's say you have a trading plan, okay, here's the thing. In the past 2 weeks, I have seen almost 40 trading plans. Some trading plans I've commented on, some trading plans I haven't commented on because they look good. Every trading plan is made to make you profitable. If you read your trading plan is rules set in stone that will make you profitable over the course of 6 months. But the thing is, like while you're trading, you follow your trading plan for the first 2-3 days, but then after that, everything goes out the window. I mean, after that, you start over risking, start over leveraging. You really start breaking your trading plan, and then things go south, and then you're left with a sour taste in your mouth about the market that, hey, you know what, this isn't working because you're not following your plan. You know, like if everyone here has the trading plan, we have around 123 people in here. If you look at trading plans, your trading plans are successful trading plans. Like, you know, when it comes to risk management, time management, which means what times you're going to trade, what periods you're going to trade, what setups are you going to trade, what are you going to look for confirmations. Everyone has excellent trading plans, but many few will follow them. You know, and it's very, very crucial that you do follow those trading plans. It will help you out a lot. Next, what we're going to look at is what happens when you take a loss. Yeah, overtrading is right there too, right? So